War drums in the Middle East, oil on fire, and the Fed is in the wilderness. No biggie, let's lift. Markets are starting the week like a cold barbell, tight, tense, and waiting to snap back. U.S. equity futures are modestly higher to kick off the session. Dow up about 0.15%, S&P up 0.24%, and the NASDAQ leading at 0.36%. That's a mild bounce after Friday's broad pullback where every major index dropped over 1%. The Dow fell 1.79%, S&P down 1.13%, NASDAQ slipped 1.3%, and the Russell 2000 also dropped 1.85%. Global equities are mixed in Asia. Japan's Nikkei led with a 1.07% gain, while Shanghai inched up 0.17% and Hong Kong traded lower. Over in Europe, the Stoxx 600 is up 0.1%, the DAX is up 0.2%, and the CAC is up 0.3%. A modest rebound after last week's pain. Crude continues to dominate the headlines. WTI is trading at $75.35, up 3.25% overnight after a massive 7.3% surge on Friday. Gold pulled back slightly, down 0.7% overnight, jumping 1.5% on Friday. Bitcoin's down 1.5% since Friday's close. Treasury yields are climbing again with the curve steepening. 10-year at 4.41%, and the dollar mixed, strong versus the yen, weaker against the euro and the pound. What's driving the market? We're now on day 3 of an Israel-Iran escalation. Israel hit Iran's nuclear and energy infrastructure in what's being called the largest strike since the 1980s. Iran fired missiles in return and is now threatening to shut down the Strait of Hormuz. That's the pipeline for 20% of the world's oil flow. Tensions are rising fast over the weekend. Trump confirmed he spoke with Putin, and U.S. and Russian back-channel talks are ongoing. Markets responded Friday with a flight to safety. Meanwhile, in Asia, China's economic picture is still packed. Retail sales surprised to the upside, but industrial output, investment, and housing all miss. Momentum continues to fall short of China's 2025 growth target. On the tech front, Taiwan officially blacklisted Huawei and SMIC, choking off more of China's AI ambitions. Stateside, Trump approved the Nippon Steel-US Steel merger with a golden share clause, giving the US final say. Meta's investing in Scale AI, and Tesla's getting a bump on the optimism around looser self-driving regulation. What could drive the market this week? The June FOMC meeting lands Wednesday, and while no rate change is expected, oil-driven inflation risk could keep any talk of cuts firmly off the table. Traders will be focused on the updated dot plot and the summary of economic projections to see just how hawkish the Fed's becoming. On the economic calendar, Tuesday brings retail sales, an important read on consumer strength. Wednesday is stacked with housing starts, building permits, and the Fed's decision. Friday's closes the week with the Philly Fed Manufacturing Index. Remember, markets are closed Thursday for Juneteenth. Geopolitically, the Strait of Hormuz remains the wild card. G7 meetings are still underway. Trump's pushing bilateral deals, but nothing substantial yet. The US-Vietnam deal could close this week, and Japan-US talks are reportedly progressing. Rare earth export tensions with China still haven't cooled off. On the positioning side, systematic funds remain underweight equities. Retail investors are starting to rotate out of US names and look overseas. If oil stays elevated and inflation expectations creep higher, the Fed may start sending stronger signals about keeping rates higher for longer. What does this mean for you? This week is a heavy set. Geopolitical volatility, Fed pressure, and macro data all stacked together with a short rest in between. Oil is your wild card, the Fed is your spotter, and the wait, it's real. Drop a like or a follow if you like this stuff. Stay disciplined, stay focused, stay profitable. I'll see you at the close, and we'll go over what really happened. God bless.